Nithin and Rahul, let's talk about what now and what next. And Nithin, I want to talk to you about what could potentially be the answer out of this issue of the trouble that you talk about. One, of course, is to try and build a much more sustainable, resilient business, which means going back to the drawing board and examining your business model. The other is expectation setting. And I know that that is something that you believe in strongly as well. But what is the prescription to your mind to get out of this?
Yeah, and I think, one of the things I've seen is, there is almost an incentive in the private space to oversell, right? Because the ones who sell well are the ones who are able to raise the most money, right? And then once you get into that whole overselling zone, once you set the expectation, because money, whatever it is, private investor or public market, right? I mean, money always comes with an obligation. So I think the first thing people should do is set, like you said, set the right expectation for the investor. You need a VC to be on your cap table, for the right reasons. I mean, you don't want to be overselling to him just to be able to raise capital, because once you oversell, then you have to constantly keep doing whatever to kind of meet the expectations you have set. So I think one is that. Two is, I think there's a lot of bloat in the industry. People have hired mindlessly, and I think some of the bloat has to be cut, and like what Rahul was saying, if you reduce your costs, you at least get a much longer runway. I think right now, everyone should kind of plan for the worst case, which is assuming that the next 2-3 years are going to be hard. If you're not in the top 1 or 2 of whatever industry you are in, it's going to be hard for number 3 and below to raise money. And so, so I think the other thing to do is just to do whatever to ensure your runway is, extended as long as possible. And also try figuring ways in which you can start monetizing users and stop all the freebies and etc. I mean, it's hard to transition, when you already built a business in a certain way, but I think, this is one of those times where it has to be done, because if it's not done, I don't know, it'll be very hard to survive through this.
Yeah, it's not a matter of choices, it is a matter of necessity. But Rahul, as companies try and make this transition, and to Nithin's point that, look at everything across the board, line item by line item, and cut the bloat. But outside of being able to cut costs, I mean, how do you grow in an environment where the ecosystem is so used to cashbacks, discounts, freebies? I mean, how do you stop the cash burn in the quest for customer acquisition, in the quest for growth?
Let me give you an example, right? If you have a 10,000 crore company that makes 1% margin versus you have a 1,000 crore company that makes, 20% margin, which kind of company would you want to be, right? Historically, people would obviously optimize for, okay, I want to be large, I want to be a 10,000 crore company, because, hey, money is free flowing, I can continue to do this forever. And, we seem to think this is such a big deal, but, if you look at all traditional companies, it's not like they've not worried about their cash flow in the past, right? I think people need to become a lot more responsible about how they treat their businesses, both on the cost side as well as the revenue side. That, I think, is number one. And B, I mean, yeah, it is difficult. Yes, it is painful. But you got to make the choice today that you want to be surviving and be one of the top 2 or 3, like Nithin said. If you're not there, you're not really going to be valuable.
Yeah, it would come back to the rule of 3, essentially. But Nithin, coming back to you, and I think this would be helpful for many entrepreneurs who are watching this program. Of course, you didn't have any obligation as far as what to deliver to VCs or investors, because you didn't have any. You bootstrapped your way to being a profitable enterprise today. If I were to ask you today, what were the do's and the don'ts that you followed that will continue to be instructive in an environment like this, what would you list out?
Yeah, I mean, just be conscious about the cost of acquiring a customer. Right, as in, until date, we haven't spent any money acquiring a customer, and it's a much harder way to build a business. There is no way to build it fast. it takes a lot of effort, because you have to.
How? Nithin, break this down. Break this down for everyone who's watching. In the episode last week as well, we said that on an average, on the higher end, people are losing 9 rupees to be able to get 1 rupee back. The average is between ₹1.5 to 5, which is what unicorns are spending. That's the kind of burn we are seeing to be able to acquire customers. How did you acquire customers without going down that road?
So the thing is, you can't build a business quickly, I think, right? As in, I started trading the markets in the late 90s, and, I think of Zerodha actually as like a 20-year plus journey. So, and really, us hitting the scale and all of this success has been after 15 years of, of a lot of struggle. So, I think over the last 5 to 10 years, somehow, there has been this illusion that you can quickly build a business. Building business, there are so many interconnections. Like, it's growing a forest. You can grow a tree, but growing a forest takes time. So I think you need to have like patience. Then the second thing is, your product offering has to do the talking, right? If the product is very commoditized, if 5 people are selling the exact same thing, I don't even know if there's a point in running a business like that, because you at that point, if it's a commoditized product, it automatically becomes the deepest pocket wins kind of game, right? So I think it's about constantly trying to up the product. And because one of the things that I've seen with a lot of startups is they stop being like a startup very quickly, right? I think the whole business here is that today's world is about the fast beating the slow and not beating the small. But startups very quickly become slow after raising money and building bloat. I think one of the reasons I think we've been whatever little success we've had is because even today we are probably as fast or faster than the even the youngest startups in our space. So. I think these 2-3 things, and also I think people have forgotten that the world has changed. Today is a world of interconnections, right? As in through social media. So if you offer something which is differentiated and the user appreciates it, I don't know if you really have to spend as much money as you had to spend, like, say 10-15 years back. The people talk to each other about good products, So I think these three things.
Well, stop being or thinking like a startup. As soon as you start to raise money, you have to take on a different mindset, a different temperament. Rahul, what would you list as the to-do list at this point in time in a difficult and challenging environment?
First, I think number one, in addition to the cost that you add when you add employees in a company, you also add a large amount of noise and a large amount of bandwidth being consumed towards managing people. I think one of the benefits of being small teams is that significantly higher collaboration exists, and that is where the nimbleness comes from. So I think that is absolutely up there in terms of what we think should happen. And I think second is, a lot of people talk about this, but a lot of people don't do this, which is being obsessed with their customer and constantly innovating to deliver to what they want or they need, right? And I think it is in that I think it's important that role models like Zerodha, spill the beans a lot more on that or share their experiences, right? I think that is what people learn from.
Nithin Kamath and Rahul Taneja, many thanks for joining us here on the Unicorn Health Check, for giving us your take on what the problem is, diagnosing the problem, but more importantly, also helping us understand what the way ahead could potentially look like and what startups need to focus on to get themselves out of this current challenge. Thanks very much for your time. Appreciate you joining us here on Young Turks. With that, it is time for us to wrap up this edition of Young Turks, the Unicorn Health Check. We'll be back with a lot more. Don't go anywhere. We're back in a minute.